I first got to know Michael about 3 years ago at a payment dinner we held in London. And I'd heard a lot about Klarna, this Swedish phenomenon, this Nordic phenomenon. And I was skeptical that it would travel outside of the Nordics. I guess 3 years later, just over $300 million later, we're the second largest shareholder as Permira in Klarna. And we obviously got convinced. And actually, we liked it so much that we've raised an entire new strategy on the back of the Klarna investment, a minority-only strategy, which is new for us as a firm. We're excited about our position. I'm excited to be sitting here with Michael. Michael, we have the belly.
Uh-oh.
We have payments. We have meets, consumer finance. Can you sort of demystify Klarna for us? What are you all about?
Yes, Andy. What is Klarna? Klarna has been around now over nearly 14 years. At the core of Klarna is a digitally driven machine learning, effectively instant issuing platform, but also predominantly is a full payment stack at the same time. So in summary, really, we have a digitized PSP platform meets consumer finance. And really, we're bringing together both sides of the ecosystem, both from the merchant and the consumer, to really, drive smooth, as you got up here, frictionless commerce. Historically, it's really been a e-commerce pure play growth story. And historically, it's been a, Nordics growth story. But as you said, in the last 3 years, since we first met, that story has got more international. And today, Germany is our biggest market, which is a big change in terms of the dynamics and shift in the ecosystem for us, as an example, both in terms of consumer numbers and in revenue numbers. And more, we're basically processing more volume through the system. I think trajectory-wise, we're going to be north of sort of 350 billion SEK or $35 billion worth of payments volume this year. I think we'll probably touch out on about over 100,000 merchants using the platform. And I think the last numbers I looked at were getting north to about 69, 70 million consumers haven't used it, right? And today we're working across 9 core issuing geographies. And then on a direct banking side, really, the support product that we've historically owned, we're operating in more than 16 geographies combined. So, today it's effectively a basically instant issuing as well as full payment stack solution that more and more is driving consumer preference in the geographies and platforms that we work with.
Interesting.
Yeah.
You said Germany is now the largest. You also read in the UK press, in the Times, I think it was, it described Klarna as a verb now.
Yeah.
So you've been...
I've had a couple of interesting articles in the UK press recently.
So that one, how are you winning in the UK?
Yeah,
What's the proposition? And tell us about the merchants you have.
I think the UK has been a great story, right? It's, I think when you and I first met, and similar challenges maybe as we thought about the ecosystem evolving out of Northern Europe, people say, how are you going to win in a card-based heavy market? And I think there's 3 core things that you see today in the UK that I think is prevalent in any market that we operate within, and it sometimes demystifies some of the challenges that people have as perceptions. I think the first thing is convenience, right? What's really happening is we're seeing pay later, or buy now, pay later, as it's really known in the UK, really being enhanced and adopted by, firstly, sort of traditional as well as non-traditional players on the e-commerce path. But it's really convenience, and the convenience they're selling to their shoppers, really, because the UK is a heavy debit card market, right? And so people don't always have the funds in their wallet at that point in time or the point of purchase. More and more you're shopping on your phone, and especially the core demographic, millennial, that we're targeting with those retailers. They're on the tube or they're on the bus, they're in a taxi, or they're going wherever, and they're not going to pull out their card to complete the transaction, right? Both personal security and 2, because of convenience and conversion. And so really we found that niche. The second element is sort of the heavy debit card usage, really, and really having access to funds immediately. And really we're providing that instant issuing capability for a lot of consumers. And really we've extended the invoice product that we traditionally had in Europe at 14 days to 30 days in the UK. And then I think the third element is to be fair and responsible. A big decision we've made in the UK is really to have a no-fee structure on that product for the consumer. Really, and the importance of that is to drive purchase frequency and adoption for the consumer, at the same time manage the ecosystem for the merchants in terms of allowing them to sell it as a service and a benefit to their consumers.
How do you encourage people to pay back without a stick?
You know, that's a very good question. I think that was a lot of the concerns, again, people raised. But, you know, really more and more, we're really adopting to the key loyalty plays within the merchant. So people want to use the product, they actually want to pay it back. You know, I think the ecosystem has built itself on this problem of trying to solve for the 1 or 2% that do want to commit fraud or there's going to be a default. Whereas the experience you're trying to solve is for the 98% that don't. And so, you know, obviously we've got machine learning capabilities that really are enhanced into the platform that are both driving both transactional and behavioral elements. And really we're using that to make sure we're lending responsibly and fairly, and really targeting those consumers that we feel are going to pay us back, right? And there's more and more data that we can use, whether that's what time of day someone's making the transaction, how quickly they're typing in their email, through to like where we feel there's a concern, we'll basically provide friction, but we'll use social media authentication as an example in this market. And more different types of authentication procedures to ensure we're providing 98% of the population, if not more, a great customer experience, rather than trying to build an experience that's trying to catch for the two.
That makes sense. And in the UK, you've cemented your position recently with an acquisition that we read about as well, the Close Brothers Retail Finance, POS Finance. Is that a theme that you think we're going to see more and more, sort of fintech buying, maybe it's a little bit cruel, but buying analog, so digital buying something less digital?
I don't think the Close Brother team would call themselves analog. And I don't think we would probably purchase something that's analog. You know, I think like any acquisition, but particularly that one for us, it's a really, really healthy customer book. It's a really, really healthy merchant book. And, you know, on top of the journey we're building in the UK, we're also seeing our solution move more and more from an e-commerce environment into store. And when we looked at the Close Brothers business in more detail beyond the customer and loan book, you know, there was two things that stood out. There was really their in-store penetration for what they're doing from a point-of-sale financing point of view that excited us. And secondly, the expertise that comes in the company with that, right? You know, we wouldn't necessarily say we are a core in-store, you know, driven company. We're really a consumer experience driven company coming from an e-commerce environment. And this just really adds to our capability in a market like the UK where there's an enormous potential for digitization and growth, really, because you have a lot of traditional players such as Barclays Finance or Hitachi Finance where we don't feel like they're serving a good customer experience or need. And so that's an opportunity for us to bring our digital capabilities together with their competency in that space and really look at that slice it category, as we call it, and attack it even more aggressively.
Yeah, makes sense. And we also read about H&M. H&M obviously believe in your omni-channel potential. Tell us a bit about that. I mean, they've invested,
Yeah, H&M. That has been a watershed moment I think for us as a company, mainly because I think that deal stretches back almost, 8 years on an email chain from our CEO to their CEO, and 8 years later, we're eventually getting into a position where, you know, both companies find a way to move forward that we announced to the press recently. You know, I think with H&M in particular, you know, I think it's a theme you see across the entire, retail environment today. But, you know, one, how can we help them really recognize and identify customers in an in-store environment in the same way that we've built 14 years in doing that in an online environment? And that's the first element. Two, then, how do you connect that customer journey online enough so the experience becomes consistent? And thirdly, how do you remove friction in the offline environment in the same way you can do it in the online environment, right? And that's at the core of the challenges that we have accepted to try and build for H&M, which I think fits really well with our core and something that's really exciting. But, you know, the interesting thing with sort of H&M, I think, is, you know, I think it's the geographical coverage that we're really trying to target, right? It's not just a UK or a Swedish component or geographic target. It's all sort of 9 geographies, predominantly in Europe, that we're targeting right now with the ambition for further expansion because, like like many retailers, they don't see border as an object anymore. And so really, how do they find a platform that can go across those borders in a multi-issuing way, that they can work with a partner that can adapt and be agile, as well as sort of work with their constraints in terms of developing at the pace they need. So very exciting, and probably more to come.
Last question for me. So you're launching a card. Do we really need another challenger card in Europe? And is it a sign of more things to come, and what's next?
Firstly, we're launching a bunch of services to consumers through our app, of which the card is a form factor of one of those features. So I don't look, and neither do we at Klarna, feel that we're launching another card. What we do feel is we see a huge opportunity for servicing consumers better than banks serve today, whether that's better financial planning, whether that's alternative payment methods, whether that's micro-lending, as an example. And really, we see more and more, like take the UK as an example. I think this year we're going to be north of 5 million consumers in the UK. If I look at that consumer population relative to other startup banks in the UK, I think it's like 3 or 4x, even 5x bigger than some of the more publicized ones, right, as an example. So we have a healthy consumer base, and we have financial services through the transactional behavioral data that we've captured over 14 years. And really, as we became a bank last year officially, we feel a whole opportunity to target that segment. But for some, it might be using the ability to use the card effectively to use Pay Later every day in every store that you want to, where we may not be present. For others, it may be the ability to reslice a transaction on their Amex card that they made on a travel journey, but they couldn't do it on their Amex card. So really providing, again, personalized, individual, flexible consumer financing options, while at the same time, some of those services may differ from consumer segment to consumer segment versus be it carte blanche. So hopefully and ambitiously, it won't be just a card, but it'll be a bunch of services, of which card is one.
Awesome. Perfect. Thank you.
Thank you.
Have a good day.